from JS Mindsets. Bill, thank you so much for joining us today.
Happy to be here.
All right. Now, the first topic I'd like to discuss is the stock market, because we've recently hit a new low for the stock market. A couple months back, the stock market really made about a 10% correction. It was rallying again, but now it made a low even lower than the correction we saw before. What is your perspective on this? I know you were on a recent podcast and you said that if the stock market falls like just about 30%, then this could be really bad for the financial system because of how interconnected it is.
Yeah, I would say 30% will wipe out all kinds of margin accounts, all kinds of derivatives. But keep in mind, 30% is not a crazy number. 30% is probably what the average bear market, somewhere in that neighborhood, 30-35%. I could see the market, barring hyperinflation, I could see equities dropping 50 to 70% without a problem.
50 to 70%. So that would put the Dow, for example, below about 14 or 1300.
Well, yeah, I could see the Dow trading to 10,000 again, just based on valuation levels. Look at valuation levels in past bear markets, where PE ratios get down to 6, 7, 8, 10 times earnings, as opposed to the current roughly 20 times earnings. You could see dividend yields. It used to be, when I was a broker back in the 80s and 90s and early 2000s, it used to be that once you got down to a 3% dividend yield, that was a warning sign. And we haven't seen 3% in, seems like 100 years. So, just looking at book values, price to cash flow, price to earnings, price to dividends, equities all over the world are grossly overextended, and that's based on easy, free credit. This is a credit bubble, and it's found its way into all kinds of assets, in particular stocks.
Do you believe right now we're seeing the trend change, like from a bull market to a bear market?
Yeah, I think it's already changed. You can see what happened in February. We had a 10% pullback. We've bounced from there. I guess it was a 50, 60% retracement of the loss, and then back down to those lows again. We posted earlier in the week, and I forget who did the article or who actually overlaid the charts, but they overlaid a chart of the Dow in 1929, the S&P in 1987, the Nikkei in 1989, with today's current chart, and they're almost identical. And if we were to follow that, time is really running out. We could see a waterfall event pretty soon.
Now, what would a waterfall event look like? I mean, how fast do you see the stock market pulling back, like you said, 50 to 60%?
Well, look at 1987. Look at Japan. I mean, within a couple months period, within 2 months period of time, in 1987, the Dow was down 45%. And what it'll look like? It'll look like a panic. It'll look like every other panic we've had in the past, except bigger, because there's more credit and it's more widespread. This is now global. It's not just one country.
Now, what would your advice be or perspective be on what the average investor should do then? I mean, completely pull out of the stock market and go into what?
Well, one place you can hide is in silver and gold. If you think you're going to pull out of the stock market and put your money in the bank or a money market mutual fund or whatever, cash is we're in a huge bubble. We're in a credit bubble, and all currencies are credit. They're debt instruments. So the way I envision this is there's going to be a flight to quality, and quality that has no liability, no one else's liability, because that's what this world is all about today, is your assets rely on someone else to perform. If you're hiding on the sidelines in gold or silver, you have no liability. Gold and silver are money. They're not debt money.
Now, with respect to the dollar, because, it seems like if the stock market's not safe, you've also talked about how the dollar doesn't seem to be safe. We recently, just on Monday, saw the introduction of the petro yuan, China announcing and making official the oil futures contract denominated in yuan. So how do you think this will impact the value of the dollar?
Well, as I said on Monday and Tuesday, every step forward for China is a step backward for the U.S. Every step forward for the yuan is a step back for the dollar. The dollar has been the reserve currency of the world. We went off the gold standard in 1971. Whether it was a stroke of luck or a stroke of genius, settling all energy trades worldwide in dollars created artificial demand. Now what you have is, for instance, China and Russia are doing energy business in their own currencies. China is paying in either ruble or in yuan. So that's less demand for dollars. I think the real wild card is Saudi Arabia. If Saudi Arabia, who they also supply China, if they agree with China to accept yuan, that's like a dagger through the dollar's heart. It's all about demand for the dollar, and demand for the dollar is becoming less and less.
Now, what is your perspective on, do you think the Federal Reserve can step in and save this situation with respect to, the dollar and also the stock market? Or do you think those days of, the Federal Reserve being able to keep interest rates low, do quantitative easing are over?
Yeah, I think it is over. They got interest rates down to, what, a quarter of a point. And in some areas in the world, interest rates became negative. And negative interest rates, we could probably talk for an hour on that, but that's like a snake eating its own tail. It's not logical. It's not sustainable. The problem is that central banks have now blown up their balance sheets. Sovereign treasuries have blown up their balance sheets. There's no one that can step in and save the sovereign treasuries and save the central banks. Back in 2008, the Federal Reserve and other central banks were the white knight pumping liquidity into the system. Now you've got interest rates going the opposite direction, and all of this debt that's outstanding is going to become increasingly more difficult to service.
Now, with respect to the average person, right? How do you think this will impact them? Not necessarily the average investor, but just the average American. How do you see this collapse in the stock market and the value of the dollar really impacting their daily lives?
Elijah, this is not about the stock market. It's not about the dollar. This is going to be about survival. The entire system runs on credit. When credit gets shut off, you're not going to be able to go to Walmart and buy anything. The shelves will be empty. Your local grocery store does not grow loaves of bread on the shelves. That loaf of bread takes 6, 7, 8, 10 different uses of credit to get the wheat manufactured, produced into bread, and all the deliveries in between, and then delivered to the store. This is going to be about survival. This is about whether or not people are going to eat. This is not about, you're looking at it from a financial standpoint. I'm looking at it from the standpoint of when this goes down, you're going to see complete and utter every man for himself chaos. I know it's hard to imagine.
Prepare for that because, financially, as you said, but purchasing precious metals to prepare financially. But what about just for survival? How does someone prepare for disruptions in the supply chain like that?
Well, obviously, you want to put some food back. You want to become as self-sufficient as you possibly can. You don't want to live in a city because in a city, it's too populated. You want to live out either on your own or in a small community of like-minded people. Gold and silver are not the only metal that you need. You need lead also. You're going to need to protect yourselves. I know this is not where you wanted to go, but this is the reality that I see. I think it's pretty obvious at this point.
How much of our current situation can be fixed? Because I know you were recently in an interview, and I think you said something like maybe Trump can save the government, but he can't save the economy. So what is your perspective on that?
I didn't really say he could save the government. I believe the country is still savable if the rule of law comes back. And we've not had a rule of law for at least 8 years, and even before that, because the corruption has gone on for so long. But if the rule of law were to come back, and actually if we were to see a full-scale comeback to the rule of law, you'd see past presidents arrested, you'd see people arrested for things, unimaginable things. And yeah, it would be tough right off the bat, but if the rule of law truly does reign over the land, then we'd have a more fair and just society. People would go back or start to think about going back to relying on themselves.
Right, but this current economic situation can't be solved just because...
No, mathematically, the debt can't be paid. That's the bottom line. The debt worldwide, what is it, 320 or $230 trillion, in not just in dollars, but and that's just current debt. That's not even future obligations like pensions, etc. It can't be paid back. It cannot be paid back in current terms. I mean, you're already seeing many towns, cities, universities, states that are to the point where they're admitting that the actuarial numbers don't work. So the promises cannot be kept in current terms, which means one of only two things can happen: either default or default via printing, which is an inflation, hyperinflation. And I think that's where we're headed, is toward a hyperinflation where the currencies become worthless.
Now you say currencies, so this isn't only a problem for the U.S., but also worldwide?
Well, yeah, I mean, how for the euro currency or Japanese yen or British pounds, I mean, they're backed by nothing. They're backed by, all they are is a full faith and credit guarantee from whatever government issues it. And basically, all central banks are the world is broke. And all it's going to take is a shift in psychology, and you'll have an outright flush. And there's nothing that central banks can do this time around. That's one of the reasons they've put bail-in legislation all over the world as opposed to bail-out legislation, because the central banks and sovereign treasuries don't have enough money to bail out the banking system. So what are they going to do? They're going to take it from the depositors.
So would your perspective be also to get your finances just completely out of the financial system? Because, as you say, it seems like there's possibly going to be bail-ins in the future.
Well, yeah. I mean, my business partner, Jim Sinclair, has been telling people for, 13, 14, 15 years, GOTS, GOTS, get out of the system. And if you're going to own stocks, for instance, I mean, I own mining stocks. I have all the certificates. Don't hold your certificates at a broker, because when your broker goes under, it could take 2, 3, 5 years for them to go through the bankruptcy court and straighten out who owns what. But if you have a certificate in hand, you can go anywhere you want once markets reopen to sell your position.
Now, before we let you go, I just had one last question about preparing for this collapse you see happening in the future. Now, a lot of people might, when they are confronted with this possibility, of a collapse, they might think, maybe it'll happen, maybe it won't, but either way, I'd rather just be blissfully ignorant, you could say, and just live life to the fullest as long as it's, as long as everything is good. But there's a way to prepare, right? And be prudent in our preparations, and not necessarily have like a gloomy outlook on life, right? You don't have to just survive being a prepper. You can also thrive.
Well, Elijah, this is not my outlook on life. This is math. Mm-hmm. The fact that the math says that at some point the system comes down, and you can see the strains and you can see the signs that it's pretty close. I mean, I would just tell people, put some food back, have a way to purify your water, be healthy, have assets out of the system, have silver and gold, which once the system reboots and restarts, you'll have wealth. And no matter what faith you are, if you have a faith, get right with God.
All right. Well, Bill Holter, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last before we